All right, what is going on, guys? Welcome to a little market recap video. So, unfortunately, I didn't record one of these yesterday, but here is yours for today. We'll go ahead and start off on ES, and then we'll go from there. So, upon market opening, we see price drop down, we break structure to the downside, we come through and we sweep out several levels of liquidity. We sweep out these 15-minute lows, these hourly lows down here, and fill in this hourly fair value gap. From there, I actually ended up seeing a setup. I never actually took this, full transparency, but if you guys watch the end of the live trade video, you will notice how I said, look, we're always trying to find and predict where both ES and NQ are going to go for the day. So why not make an educated guess on this? And this was the educated guess that we came out with. Would have been a winning trade. Essentially, we came down into this hourly fair value gap. We got a break of structure to the upside. We had a fair value gap come through, get filled, and then a reaction off of it. Boom. Entry off that, stops underneath here. Targets were literally just S&P all-time highs, and I didn't want to bother and put, extended take profits past all-time highs on a mock trade, right? So this was ES for us, ended up playing out pretty well. We have now decided to come back down, and I honestly do think that this is going to be the start of finally the push down to start filling in some of these lower imbalances, hopefully. So that's kind of what I see coming through for the market going into the rest of the week. Now, as for NQ, we unfortunately took 2 losses today. We'll go over the first trade that actually would have hit 3 or 4 take profits, depending on if you listed this as a take profit, if we hadn't closed early. So if you guys watched the live trading video, I was pretty much explaining how we had market come through, sweep out these highs, come down, break structure to the downside, sweep out these hourly lows, and then start moving to the upside on the 1-minute time frame. We ended up seeing a break of structure off of this high right here with the closure above. From there, I decided to mark out fair value gaps. This was the only one that was offered. We got a move to the upside, and that is what I entered off of, and then my stops were down here. However, something that threw me off today, we had this 5-minute fair value gap that was formed off of the sweep of liquidity, break of structure, fair value gap got formed. And we can see that we had a break of structure to the downside on the 1-minute time frame right here with this candle. Boom, we break structure to the downside right here off of a 5-minute fair value gap. To me, that says, hey, the 5-minute is going to continue to the downside, and this is actually going to push further and further down into these imbalances, down into these draws of liquidity. So for me, I saw that, and I said, okay, well, that invalidates my long bias. I'm going to go ahead and scale out of that. So I was able to get out of this, not at stop loss, or because it never actually ended up hitting stop loss. I ended up scaling out of the position right around here, okay, for around like a 75% loss of what I would have lost if it went all the way through, and I de-risked on this trade as well. And then when that happened, I decided to go short right here because obviously my long bias was invalidated, right? And because of that, I said, hey, this is giving pretty good short opportunity. So from there, I closed out of the long, entered a short position, and ended up immediately losing out on that. Definitely could have traded better today. If I had just simply stuck to, my first trade that I had taken, left it, let it rock as is, I would be 4 take profits deep with profits still running, stop loss still all the way down here. Yeah, this is a perfect example of why we shouldn't cut trades short, even if, market experience and overall, let's say we see something on a lower time frame and it causes us to reconsider a trade. This definitely is a perfect sign of, why we stay in trades all the way through till stop loss or take profit. This was I guess, a example of immature trading from me today. Not being patient, not seeing the setup fully through. This is definitely, most of the market recaps I sit here and, say, hey, executed exactly how I wanted to, because throughout all 2024, I've been freaking killing it. Yesterday we took our first red day, and then today we had 2 losses, took another red day. So yeah, like today, there's definitely something to learn from. Don't cut trades that you're in to flip bias into the other direction, and just take your trade and hands off once you take it. Just see how it plays out. So if we had done that, this was the very first trade that we took. Boom, bias would have been fulfilled. Everything would have been hit. Take profits would have been solid. I guess another thing to learn from this is, don't cut trades short to go in the opposite direction. And instead, what you can do is you can just wait, see if your actual invalidation point gets hit. And then at that point, you can reconsider and say, hey, do I want to get back into the market or do I not? Is it too risky? Am I, have I leveraged my risk enough today where I'm safe enough to take another trade, and then you can go from there. But that pretty much wraps it up for our market recap today. Again, rough day of trading. I know a solid amount of people have been having a tough time this week for whatever reason. I thought last week was going to be really brutal with all the news, but last week was actually really, really pretty. I think a lot of people overall are just having a tough time trading this January market for whatever reason. January has actually been really great to me so far. And hopefully I can keep that up, and hopefully I can make back the losses that were taken yesterday and today. So that being said, I'll see you guys tomorrow for Daily Bias. Peace.